Behind the growth, what there might be certain key driving factors which are driving the industry ahead. Talk about them.
Sure. So number one, the shift from physical assets, right? Things like real estate and physical gold, which are one of the favorite investments for Indians at the moment, right? This generally undergoes a change. When you look at China, you look at the developed economies over time, there's a shift from physical to financial assets that happens gradually as the prosperity of the population and the economy increases. This is a shift that is eventually going to happen.
Hi Sankarsh, how are you doing today?
Great, I'm doing great.
All right, amazing, right? So, before we get into the discussion, let me set the context and pace of the session today, right? So, today we'll be talking about importance of wealth management and investment, right? So, we all know that these two are the aspects which play a crucial role in everyone's life, right? So, today we have Sankarsh, who is CEO at Savart, right? Before we deep dive into the set of questions that I have for you or the discussion that we have today, I would like to know more about you. If you can shed some light about your journey, how your journey has been so far, it'll be great. So yeah, over to you, Santosh.
Sure. Thanks for having me in. And to begin with, I started investing personally first, just out of curiosity, honestly. And I love reading books, and that's how I came across investment. And then over time, I kind of had my own ups and downs with investing, made my own, compiled my experiences into a small book, which later I published, termed The Financial Nirvana. And that gave me an initial set of people to work with and whom I started giving investment strategies and stuff, and that morphed gradually into what became of Savart. And today we are one of like India's largest investment advisors, and we have clients, across the world at the moment, and we have a proprietary investment research automation system termed the Apart, which has helped us clock a massive outperformance over the benchmarks, and we hope so in the future as well. So that's like a very brief uh,
All right.
understanding of what we are doing.
Amazing, amazing. Sounds very interesting to me, right? So what started off as a hobby later turned into a profession, and again, a very good one, right? So
Yes,
amazing, amazing, right? So before we get into the other question, right? So can you give an overview of the industry size and what are the market dynamics that are playing a crucial aspect over here in terms of the industry?
sure. In terms of the market size, we are looking at anywhere between 3 to 5% of the Indian population actually investing into the stock market. And in fact, the however, these numbers could be easily misleading because all of these, even these 3 to 6% of the people who hold a demat or who are termed as investors are not actively investing. So the technically the active number of investors in the market would right be around 50 lakhs to 1.5 CR. I'm keeping that kind of margin because there's so many factors at play, and there are a lot of demat accounts which are, say, an individual might be holding 2 3 sometimes 4 demat accounts as well. So it's not accurate only if we count the number of active demats as well, right? So the number of active investors that we're looking at would be 50 lakh to 1.5 CR. Of course, this number is big, but not big enough when compared to the actual potential out there on how big the markets can be for India. And when you compare it with the other emerging economies, or more likely with the developed economies, there's massive potential for growth, but it will be gradual, and it will happen over time. Basically, that's the essence of it. And in terms of the investment advisory space and the wealth management space, there's massive competition and a lot of new players getting it into the market, and the old players as well, the incumbents as well, adapting to the new market shift towards digital kind of asset management or robo advisory. So it's that the transition is happening for the old guys, and for the new guys, there's a massive change that they are bringing as well to the entire premise that advice or asset management or portfolio management is only for the HNI or the high net worth investors. It's not for the retail. I think that's changing. Savart is one of the pioneers there, and of course, we're not the only ones. There's so many good players out there doing it. So the competition is up, the number of advisors are up. However, the number of advisors is still grossly small. I think I might say there are about 13 to 1400 registered investment advisors with SEBI who are, I think, actively doing business. That's a very, very, very small number, basically. I think over the next decade, we'll see a lot more advisors coming into the market, lot more portfolio management services, as well as brokers, as well as new investors into the market. So a lot of potential.
Correct. So the term or the figure that intrigues me the most about this whole point is that you mentioned that the untapped market is around 95 to 93%, right? Where of the population who is not investing actively,
Yeah.
right? So that number is huge, right? And when we see that, okay, the mindset shift and people trying to invest more or moving towards looking for other opportunities as well for parking their money, right? And investing in stock market could be one of them. This has the huge potential that we can see. You rightly mentioned that, right? Correct.
Correct.
Interesting. Now, so again,
Yes.
so we
Just one
yeah,
correction there, which is we can't practically expect actually 93, 95 is not the untapped potential, but that number could rise to say at an ideal stage 40, 50%. If you look at the data for the other developed economies as well, because
right.
generally stocks or riskier assets are not for all and not in all situations as well. So they're looking at that number, not the entire market investing. If it happens, great, but then I don't think so.
Interesting. Right. So again, so behind the growth, what there might be certain key driving factors which are driving the industry ahead, right? So if you can highlight one or two of them or talk about them.
Sure. Sure. So number one, the shift from physical assets, right? Things like real estate and physical gold, which are one of the favorite investments for Indians at the moment, right? This generally undergoes a change. When you look at China, you look at the developed economies over time, there's a shift from physical to financial assets that happens gradually as the prosperity of the population and the economy increases. This is a shift that is eventually going to happen. So I mean, COVID was a trigger for new account openings and a lot of new investors getting into the market. But these are all short-term triggers. Some of these new investors will go back, make initial losses, and never come back to the market. Some of them will again come back with refreshed thoughts and refreshed ideas and lessons from their past failures. So this churn in the market is something that happens normally, but irrespective of whether there are short-term triggers or not, there are new investors going to be added into the market. And as the income tax coverage and people, as more and more people start paying tax, they will look at tax planning, they will look at saving tax with ELSS, with all looking at all opportunities that they have, right, to effectively manage their finances and to effectively grow their wealth. So they will end up investing in something like stocks and mutual funds over time. So this massive amount of triggers, in general, the increasing prosperity, adoption of digital assets, this move from physical to financial assets, and the growing what do you say attractiveness of equities as an asset class, both in terms of return and both in terms of, and also in terms of ease of investment, will all aid this growth over the next few years and decades, basically. And this is not something that's new. You look at the other economies, like I previously mentioned, you will see this pattern emerging across different economies. So this is not something new. It's very evident with the data.
Correct. All right, amazing. Right. So, Sankarsh, what are the challenges which are faced by consumers or people today, right? So, when you have been in this industry, you know the in and out, right? You know how people are reacting, right? So, what are the key challenges that they are facing at this moment?
Okay, you mean in the case of like investors, what are the
Correct.
challenges they face?
Correct.
Great. Okay. So number one, the lines are blurred between what is trading and what is investing. Most often people are confused, right? When they're actually speculating, they actually think they are investing. So the fine line between them needs to be understood pretty well. So the lack of financial education, not just about trading and investing, but about and most of the people I talk to, they ask the question back like, okay, what is the stock market? We heard of it, we looked at it sometime, and then I know that some of my friends are investing, but I really don't understand what that is. So the need to understand about stock market, they may not actually end up investing in it, but at least knowing it is very important. And not just to know about investing, but also about the overall personal finance, right? You need, if you need to understand your finances, whether it's saving, whether it's investment, whether it's your liabilities, you need to know. So that personal finance education, I think that's a massive challenge. Basically, the education system isn't covering it, and the in general in families, it's more of a taboo in most families to talk about finance openly with kids at a young age as well. So the number of sources to acquire this knowledge is very limited. Of course, with now things being on the internet and information becoming democratized, right, there's opportunity, but somebody has to know that there is that opportunity. The initial incentive needs to be there, that yes, I need to understand. I don't need to be an expert at personal finance, but I need to know about it. It's a life skill basically. So that's one challenge. Second, coming back to the thing, once you have the basic knowledge, knowing about the difference between investing and trading, and the importance of doing research before investing. So when one looks at real estate, they do a lot of research before getting into an investment. They do multiple visits, they talk to a lot of people, they check out the paperwork, they check out the house, the nuances of the entire investment that they're making. But when it comes to stock, there's no due diligence in most cases, right? Most people make those decisions by gut feel, by what's being talked about in the newspaper or TV or hearsay or grapevine. That's very dangerous. So these challenges are something that we initially face, and because Savart deals with mostly first time investors, they're investing for the first time in the market. So there's a massive fiduciary duty as well upon us to educate clients before they come in. So I think this is the challenge, and I think that's what we need to focus on.
Correct. Correct. And I'm sure you as a firm are taking several steps in order to educate people, right? So if you can shed some light over there, what are the key steps or changes that you are bringing in?
Yes. So number one, we are very particular about say what we sell, how we sell, and setting the expectations right. So not just about theoretical knowledge, we also give practical explanation to them in terms of whenever we are discussing return. Generally, firms have tend to have a inclination to actually oversell, right? That hey, you'll get some return. It's, you know what, it's guaranteed and stuff. It's of course illegal to guarantee return, but again, you need to make the sale, so most people fall for it, and then they get it done. So we are very strict with those kind of stuff. We set the expectations correct, and we say that there's a chance for risk of loss of entire capital as well, and there is liquidity risk, there is massive amount of market risk involved. So you need to understand what you're getting into. One, that's the kind of basic practical education that we have. And when I say practical, we also ask them to actually start with a smaller amount of investment. So unlike the bias where most advisors encourage to come with big amounts so that they make bigger amount of fees, we try not to do that, and we have succeeded so far in not doing it, which is that help them start small, help them understand the domain, the market, the entire process. They don't even know what's a demat or a trading account, so we need to explain to them very carefully. It's a new thing for them. They need to be made comfortable in that. So those basic steps is where we handhold them, and then we say, okay, start with this small investment. Okay, now you understood this. Are you confident? You want more time, or you want to keep investing small amounts until you really understand the market? And then once there's a fall in the value of the portfolio, or there is a growth in the value of the portfolio, we are keeping them engaged basically. Okay, there's an uptick or a growth in the portfolio, don't sell. Don't go for that small profit, and don't look at it just like a ticker, a share price moving up and down. There's a business behind it. Try to understand what's going on behind the share price. That will help you understand not to take that 10% profit, but the another 90% of potential profit out there. So try to understand as much as possible. And we introduced a small concept called the research note, where we not just to our clients, we don't just tell them, okay, just buy this. We also give them the rationale behind the investment. So a research note is like a research report which most of the firms out there publish in the market, But a research note is for the layman. It has a lot of visuals. It speaks about very basic stuff. It doesn't use too much of jargon and the technical things. Easily understandable on why we are recommending a particular investment. So that's been a helpful to a lot of people. We have got some great feedback, and we are upgrading the research note to have a little more information, but bite-sized and in very simple language. So I think that has also helped us a lot. And the last initiative that we are working and will keep working on is our Nirvana program, where we try to educate people in terms of the markets, and giving them the knowledge and giving them the tools as and when required to do their own personal investments. Now, everybody doesn't need Savart or an advisor. They can do their personal research. It's not impossible, right? So we put up blogs, we put up articles which explain small concepts one at a time, and then get into advanced concepts as well. And we are actually upgrading the entire Nirvana program as well, which we have, and soon unveiling a complete basic to advanced education portal, most of which is free, and whatever the parts which are paid, or also what we are going to reinvest the proceeds from that back into educating kids and other groups who do not have access to personal finance education.
That's quite interesting bit right there. You mentioned, right? Now again, you
Yeah.
have been in this industry since a long time probably, right? So basically, what are the key contributions that you may want to highlight at this portal?
Sure. So, and I mean, I missed the part where you said the contributions of, sorry, can you repeat the question?
Contributions that you have made in the industry as a firm.
Okay, got it. I mean, I think at the moment and the stage that we are, I'm more of a learner. So I've taken more from the industry in terms of talking to veterans in the industry and learning from them. And of course, we have changed the game in very meaningful, significant ways. One, like I said, the way we conduct ourselves, whether it's a trust, whether it's a transparency in an industry where a lot of mis-selling happens and a lot of wrong expectation setting, over committing, and not being transparent with clients. We have changed the game there, at least with the clients that we deal with, in what level of transparency you expect from an advisor or a asset manager. That, I think, is a change that we have made. Second, we have made from a technology angle massive number of changes. So you look at our application from multiple ways. From most of the advice is generally a tips based or a push based advice that goes on to clients. We have succeeded in converting it to a pull based or a client based client centric advisory system. What do I mean by that? Like, in our application, instead of we sending out notifications to clients, we actually ask clients what their specific quantum of investment, frequency of investment, their specifications in terms of what their preferences are. Do they want to make ESG compliant investments, Sharia compliant investments, Jain compliant investments, or non-sin investments? So we have a lot of control that we bestow upon a client that helps them choose and invest in what their values align with. So this is a small example of how we have used technology to enable that kind of personalization. So values based investing, not just value investing, right? So values based investing is something that we have introduced. And third, another significant change that we have made is we are one of the few firms that has been able to go global in the investment advisory space, not just for clients in India, but across the world in more than 33 countries, and also investing in international destinations. So we have been able to create and like blur those borders, basically, the for the financial markets, for the segment or the client segment that we are dealing with, the advisory space, correct? So that's, and the last point that I would add is again from a technology angle, but the entire automation of the research process. Now that's a difference not just for this industry, but across the world, something that a lot of advisors, asset management managers are trying to do. They've been able to do a commendable job at it, honestly. So the system that we have built, which is called APART, Advanced Process Automation and Research Technology, so that has been able to help us automate the entire process from investment discovery until the exit, including rebalance, tracking portfolios, looking at qualitative, quantitative information, and making investment decisions. So that tech has been game changing. So these are the stuff, but still I would say we have learned more than we have given more, and we'll over time give back.
Correct, correct. Quite impressive bit right there, to be honest, right, Shankarsh, with you. So now again, the COVID impacted a lot of the industries which are out there, right? So I'm sure it impacted financial markets as well. So what is your take on it? How did it impact specifically to your firm?
So one, from a markets angle, yes, it has impacted a lot of people, a lot of markets. And from a health wise, I don't need to even talk about it, the kind of negative impact that it has had everywhere. But there are two perspectives, and most of it are lessons that we have learned, honestly. So I wouldn't want to ever say we have benefited or kind of it been a positive in any way. COVID has been negative in a lot of ways, but there are certain lessons that we have learned. One, from a company angle, from a business or an entrepreneur angle, we have learned to be ready for black swan events, basically. Something that I didn't see in my lifetime, right? Or at least during my business lifetime, I haven't been through it. So that gave us a lesson on why it's important to plan ahead, be ready, and from a financial perspective, have the resources ready, your accounts in place, your funds in place, and not being on the edge always like we used to be before. So we now plan well in advance, whether it's our payables, whether it's our cash flows. We have changed the way entirely, and we now have a very, very disciplined process. So I think that's one lesson that we have learned. Very basic, but we weren't following that. Second, from a markets angle, like I said, a lot of new investors came in during that period. A lot of them were at home. They had the time. They wanted to invest. They wanted to learn, and they wanted to do something new. And that's how a lot of people came in. So initially, the markets fell in terms of the markets had a huge nasty crash, and then they recovered massively. So one, from an investor addition angle, we saw a lot of positivity there with new adoption of markets. But in terms of the actual markets itself, lot of volatility. Again, the lessons we learned there were pretty simple. You need to have the conviction in the investments that you have made. Just because of a nasty fall due to a black swan event, you shouldn't give up on your investments. And at that time, 2 3 months before that nasty fall, actually we were sitting on a lot of cash. On in early January, our apart system actually gave signals to move to cash. Now, whether it was because of COVID, it was it a pre-signed thing? No, we didn't know about that stuff, and most likely our algorithm also didn't know about it. But it was looking at millions of indicators, and something triggered that. And yeah, and of course, that's what our proprietary things are, on how we are able to look at stuff and make decisions which are critical to clients money. So we moved into liquid funds much before the market crash happened. And then when it started recovering, we came back, and we kind of made a good numbers there for our clients. So yes, lot of lessons we have learned. And also, final lesson, I think, apart from all of this, is that we need to work together and give back to the community a lot in times of need. I think all the kinds of people who came forward that time, and then they put their lives at stake, their health at stake to help others. I mean, that was heartwarming. And we wanted to be in a position to do much more over time. So the next time something like this unfortunate happens, we want to be way more ready to do much more and be more activity in the give back. Basically, we felt we didn't do as much as we could last time, so we'll do it better next time.
Correct, correct. Right, Sankarsh. So again, how the market has evolved over the past couple of years. You mentioned that market is volatile, right? So you might have seen a lot of ups and downs, right? What are the key trends that you have seen throughout the market in your experience?
Yeah. So I mean, I'm a long term say in from a long term perspective for India, the prospects are amazing, like I mentioned, from an investor angle, and so is for the markets angle. The way we are growing, I mean, of course we could get into a lot of micro level details and the okay, inflation, this GDP numbers, this that and this that. But of course, that's all over the short medium term. That's how economies work. They just don't go up in a steep straight line, nor they go downwards always, right? So in the long term, this massive great potential and promise that India holds. And there are millions, not if not millions, thousands of super entrepreneurs in India building the next big businesses. We just need to keep our eyes and ears open, invest, believe in them, and ride the upward journey with them. I think that's exactly what we are trying to do each and every day, basically. And that's the trend I see: positivity, optimism, risk taking ability. I mean, amazing amount of innovation coming up. And that gap which was there, where, for example, for the IT industry. We started with outsourcing. Now we are getting into cutting edge technologies. So that transition from, or not just being an IT hub for getting back office jobs, or just doing what do you say a fixed kind of work, right? You have this task cut out and you get it done. From that, we are now moving to innovative technologies as well, and which always we had the potential, but now we are kind of doubling down of it on it as a country, as a group, right? So that is amazing. And the kind of ROI that will bring over the long term, it's superb. So so my simple message would be, the only trend that I see is the long-term trend and the promise of this beautiful nation. And in the medium term, short term, there will be massive number of challenges, massive number. It's not going to be a smooth ride, but again, that's what entrepreneurship and risk taking is about, and investing is about, right? Going through those challenges and getting there. And I often have this debate with a lot of my team members as well, that okay, maybe we should start looking at international destinations to invest. Of course we should look at international destinations to invest, but in fact they pitch it as a diversification thing, right? That we should diversify. Of course we should diversify, but I always have a bias towards having a large significant portion of funds diverted towards India, basically. So that's how optimistic we are as a company and as a team. And even though we have the urge to diversify, we have a positive bias towards India, basically, when we invest.
Correct. Right. So that brings me to my very last question for you today, Sankarsh. Like, where do you position your firm in next 3 years or so, maybe?
Yeah. So we want to be, and we are on track to be India's largest asset management company, a tech-driven asset management company with laser sharp focus on making long-term investments and helping people create that outperformance, that alpha, right? Which we are making at the moment. We want to consistently make it over the long term. So that's our promise to clients. We want to do that over the next 2-3 years. So from our own mutual fund to PMS to AIF to our current RIA business, scaling it up even more. We are looking at an entire suite of asset management products that we will be launching very soon, actually, over the next 1 to 2 years.
Correct. Interesting bits. So Sankarsh, what are the key metrics that you are tracking in order to reach there, right? So as a CEO, what are the metrics that you are tracking?
My favorite metric always is the performance. That's what that the investor portfolio performance, right? The kind of return that we are generating for our clients. That's my favorite always to look at, because if we don't do better than the market, then they better invest in an index fund. Why should they come and pay us a fees, right, for managing? They could just put in an ETF or an index fund that tracks the benchmark, and they make that money. That's it. So we have been outperforming almost by 100%. I mean, doubling the benchmark return since 2019, since we got our advisor license. So we want to continue doing that. So that's my North Star metric. However, there are a lot of more important metrics. Our client satisfaction. So we have our own net promoter score, the general NPS stuff, how our clients rate us, what are they saying, what are their reviews, and not just the positive reviews. We love listening even to the negative reviews, because that's where we have a lot of potential to improve, right? So I have those individual conversations with clients who are unhappy and why they're unhappy, what we could do to do it better, right? And when we initially thought performance is always number one, nothing else matters. But of course, apart from ethics, transparency, and trust, we now understood that keeping clients notified and keeping the communication clear is as important as actually making money. So that engagement is what we learned. So when I talk to clients, that's when we learned that this is also equally important. We are focusing on that. So how well we engage with clients. So there's not one metric for it, but of course it's an important thing we track. And finally, revenue. That's what the business needs to do to grow as well. So that's also something that we track very closely, of course.
All right. Amazing. Yeah, so I believe it was a lovely conversation, Shankarsh, and I'm sure that the audience also might be able to take some one or two bits of lessons from here, right? So this conversation, right? So interesting. Thanks, Shankarsh. It was a pleasure having you over here.
Thank you so much. Thank you so much. Pleasure was mine. Thank you.
All right, thanks.